Everybody, happy Monday. Let's go get started here. We have a lot to talk about today. It's the first official week of summer trading. So we're going to take a look at the economic calendar. We'll see what we have lining up this week for earnings. We'll take a look at some major indices, some sectors, and some currencies and cryptos, the usual. So we're going to get into the charts. We'll take a look at the risk disclaimer, and let's go ahead and kick off the Pulver report. Nice to see everybody today. Let's get started. All right, I'm going to switch over here. All right, we understand there's risk in trading, everybody. Please and always use trade capital only. Do not trade with money you cannot afford to lose. Anything I'm talking about is for educational purposes only. All right, you know the deal there. In the charts, let's take a look at our indices. Let's look at the SPY. Okay, so we have the SPY retesting the highs from early May. We had highs back here May 10th and 11th. We're retesting. We have pre-market SPY at 422.76, which is slightly higher by about 16 cents. So the question is, are we going to tap the highs and drift higher, or are we going to tap the highs and start to fall? One thing we have been paying attention to, I've been paying attention to, is morning everybody, morning Wayne, morning Charles, morning Catherine, morning Chris. One thing I've been paying attention to is a little bit of a summer lull. If we go back into the daily chart, let's go back into 2020. Let's take a look at June of 2020. So right here, we had this nice little May rally, call that the pre-summer push. We had this nice, this is the first official trading week of June here. We have June 8th, a high, June 10th, an indecision candle, and then we have a nice gap lower. I just want to spot how big that was. So there is about an 8% correction through most of June and into the end of June. So, if this is any indication of what we might see as May stretches to new highs, has stretched to new highs in current markets, will we see a bit of a pause or a correction or a profit taking setup for the old saying, sell in May, go away? Maybe it's pushing hard into May, but taking some profits here at these new historical highs. And just wondering, have we hit a peak? One thing I'm going to label for today's Pulver report is, is this what euphoria feels like? Is this what irrational exuberance feels like? Is this what a high in the markets feel like? Whether you see it or not technically, which we kind of do, I'm cautiously bullish. The evidence is not there to see us go bearish, but it's not that far away. One type of correction like we had last summer, June, an 8% correction, we would certainly be looking to break some pretty massive trend lines, right? So again, I'm not saying that falling 7 to 8% is a doomsday scenario, but we might be looking at some indecision near these highs if we have some type of correction coming in the next week or two. So we'll take a look. This is what I'm going to be watching this week. Do we tap the highs, and score a point, and then we start to pull back and see some profit taking as this week kicks off? If you remember last Friday, hopefully all of you had a chance to join me for the trading battle. Myself and Casey Stubbs, hosted by 8Cap and Boris Schlossberg. Awesome session, a lot of fun. Curveball was thrown at us. We had to pick each other's trades prior to non-farm payroll, which was pretty crazy. And fortunately, I made a few bucks, which was nice. But it was difficult. It was a challenge, but it was a great session. So hopefully y'all tuned into that on Friday the 4th. And here we are, coming back to it. What do we have to look forward to? We talked afterwards during the trading battle, and I still think that the DXY. Okay, we have some good structure. This is the dollar index. We have some good structure on the right-hand side of the trend line. Will the DXY be coming back to revisit the lows before we see some type of bottoming formation, or is the non-farm numbers and the Fed discussing interest rates, or kind of forced to discuss interest rates, look, inflation is being felt. I think we all know that. As consumers, we know that. Okay, real estate certainly feels like a high. Automotive wise, feels like highs. You got used cars that are selling for $3,000 to $5,000 more than what they should. You have houses where people are throwing money sight unseen, paying above asking, guaranteeing shortfalls on the appraisals. Interest rates are super low. Inventory is super low. So it's I think a top this is what it feels like. If this is what it felt like back in 2008, 2009, when we thought there wouldn't be one. And then of course that was more of a debt crisis, financial crisis in 2008-9. 2020 was a health crisis, starting to recover, but not everybody's going back to work. So if you take a look at the calendar from last week, let's go to last week's non-farm numbers. We have CAD numbers as well. This is this week, so let's go last week. Last week, non-farm numbers. Everyone can see my screen, right? Yep, okay. So last week on Friday, and again, it was kind of an interesting week. It was a shortened week with Memorial Day. We had ADP numbers, which are usually coming out on Wednesday, came out on Friday. They beat expectations, but then non-farm numbers forecasted 645, came in 559, but we had a positive revision, not by much, 266 to 278. We did have a decrease in the unemployment rate percentage. We had a big bump in average hourly earnings. We'll see. Okay, CAD employment, negative 23 forecasted, came in negative 68, so 3 times more than expected to the downside. Unemployment rate stayed the same. So, we saw some interesting price action on Friday. Let's go back to Friday's chart. So we saw the dollar get hit pretty hard during non-farm payroll. We saw the Aussie and the New Zealand make a comeback. The JPY, surprisingly, the Japanese yen remained fairly strong. Going into today, we're starting to see the Japanese yen again, still strong. The CAD is weaker, which is good because I'm short CAD yen, which is helpful. But New Zealand and Aussie are both pretty firm today. The pound is making a little comeback off the lows from the London session. And we have the dollar, the Swiss, and the euro on the softer side. But the CAD is by far the weakest currency pair this morning. So that should be hopefully helping out for something like pound CAD, which I'm long, euro CAD, which I'm long, CAD yen, which I'm short, and Aussie CAD, New Zealand CAD, which I'm long. So far this week, it's going to look decent to start things off. If this pace continues, then hopefully I'll see some profits in the Forex side on Aussie CAD, Euro CAD, Pound CAD, New Zealand CAD. So I'll be watching currency pairs like that, looking for some CAD weakness. I've been talking about this for the last month. I mean, technically speaking, I look for CAD weakness. We're starting to see it. That's good. And JPY strength. Interesting with last Friday's movement. Even though we had an Aussie and New Zealand power play towards Friday's, this is really Friday's active zone of the U.S. session, the JPY still held bid. It still held pretty firm. So that's pretty interesting to see on the Japanese yen because usually it is not a very strong currency pair ever. And when it is, we usually see some risk-off trading. So it's interesting to see the JPY stay firm and going into today's trading also stay firm and kind of keeping up with those stronger risk assets like the New Zealand and the Aussie. All right, so we'll digest this all this week in the Flex Room and Equities on Demand, see what this all means. But we'll take a look at some currency pairs here in just a moment. But dollar index, same story. Chart alarms are set at the high, at the low. This is a critical spot. The DXY, if we're going to see any bullishness, we've got to break above 90.63. I'm looking for a daily candle close above it. Last Thursday, by the way, we had this nice bullish candle. Friday was non-farm payroll. You can see we gave a little bit of that back. Chart alarm set at the low, chart alarm set at the high. If the dollar index doesn't move, it's a lot of inactivity, and I'll just wait for chart alarm. But if we can get something to break these highs, we have a monthly target there, we have a weekly target there, we have a weekly target there, we have a yearly target there. This is why I've been looking to get bullish on the dollar. I know it's also a fairly crowded trade to the downside. Okay? So, everyone is, not everyone, but there are people out there, there are headlines out there that are reading that, will the dollar be replaced? Will the dollar lose its world reserve currency status? And I had an interesting discussion last night. Neighbor of mine actually works for JP Morgan. He's pretty high up on the macro side. And, we had an interesting conversation last night. So do I think that the dollar is going to get replaced? No. And the reason why, and I'm not saying that it can't be, but I don't think it's happening anytime soon. Because we've seen the same, threat for the last year. I think it does a great job of scaring people. I think it does a great job of forcing people into other things other than cash. I think it forces money to be, moving throughout the world and circulating. But right now, I don't think there is truly a replacement. Somebody might argue that the Chinese yuan is going to become the new reserve currency pair or the reserve currency, but I don't know. I don't know how much trust the world has in China as the number one backer world reserve currency for right now. Special drawing rights and IMF and all that stuff, interesting discussion because, we have special drawing rights in the dollar and now the Chinese yuan and the euro and the pound and the Japanese yen. But long story short, do I think the dollar is a crowded trade? Technically, yes. I think that even if the dollar goes down, we're on the right-hand side of the trend line. I'm going to look for a divergence. I'm still looking for bullishness on the dollar. So Traders that are with me in the flex room, we've been long on the dollar. I still like it. I still like Aussie dollar long or short. I still like New Zealand dollar short. I still like dollar CAD, dollar Swiss long. I'm looking for the evidence. One play that I'm also watching really closely here in currencies is the dollar yen. You know, if we're going to see a trend lasting for the summer, let me go into this chart here. If we're going to see a trend lasting for, well, maybe it's not ready yet. But one thing I think by the end of the year, and let's make a note for today, June 7th, the first kind of official week of trading summer. Let's make a note and say we talked about the dollar yen, and then let's come back and circle back to this in December of this year. And the reason why is I think that the dollar yen is either going to hit 118 to 120, or we're going all the way back down to 102 or 100. And I know that's a big deal, but I think that the JPY is up to something big, for better or for worse. You know, and so if we have risk on trading, then possibly we see this move. If we have risk off trading, possibly we see this move. But I don't see the dollar yen going sideways for the entire year. This is probably going to have to be some type of movement where we have this posture. To me, this suggests that there's probably more upside coming, but this is also mega weekly multi-year resistance where we could fail. So if I'm going to make a bold prediction, I think that the dollar yen has the ability to get to 118, 120 by the end of the year, or 102 and 100. Now, hopefully one of those predictions comes right, and we're obviously not going to be like, well, he said 118, 120, and it goes down to 101 or 100. Well, yeah, but we can short that. We can see that price evidence. We can short the dollar yen from 108 all the way down to 102 or 108 down to 100. We can also buy it from 110 or 111 all the way up to 118. So we can participate in this move, but what I'd like to see is a little bit more confirmation going one way or the other. Okay. All right, let's go back to the SPY really quickly. So pre-market, we're looking for a like 12-cent gap higher, not much. Let's go to the DIA. 348.56, slightly higher, less than $1 higher, but pre-market is looking a little bit bullish. We have the high back in like May 9th, May 10th. And that high is sitting around, what is that high sitting around? 351. So can the Dow start cracking those highs at 350? Chart alarm is activated. Will we hit this chart alarm at the high, or will we hit this chart alarm at the low? Will we have an indecision week? I don't know. We'll find out. Okay, but I'm watching chart alarm set above, chart alarm set below, and let's see how price unfolds. Okay, QQQ, let's go to the NASDAQ. This is pre-market down. This is actually down by about 29 cents. Chart alarm set at the highs from late April, and chart alarm set at the low from mid-May. So what's going to happen this week? It's going to get stuck somewhere in the middle. You know, some type of indecision. Do we tap the highs, tap the lows? Just don't ignore this structure, right? Major support, major support, major support, major support. If the Qs break below here, there's a lot of correction territory to the downside. Okay, do I think that we're going to see that? Not necessarily, but I think it's getting harder and harder to justify why we're holding long. You know, you're starting to see that the more inactivity, this is coiling up towards these highs. At some point, we have to have either a blow-off move that forms a top later, okay, or we see that this just works its way into a complete forced decision, and we end up rolling through this trend line and breaking these major support levels for a decent corrective cycle. But this is what we keep watching for. This is why in equities on demand we may remain directionally neutral. This is why in the flex room we're looking at, you know, currencies that we can trade both directions, whether it's risk on or risk off. We're trying to have some exposure on both so we can get paid either way. Okay, but that's what I'm looking for at the QQQ, IWM. Also sideways, we have pre-market 227.77, about 37 cents higher. We do have a trade running on the IWM. Hopefully we can get paid on that this week, if I'm not mistaken. Let me check my IWM really quickly. Where are you? IWM. We have expiration out until the 30th. So we have plenty of time. We have, you know, the rest of this month to see the IWM go somewhere, but hopefully that somewhere is at this high or at this low with some decent volatility over the next couple of weeks. Okay, I want to take a look at some sectors really quickly. Let's take a look at energy. Energy sector at some new highs. So, you know, oil and gas, energy. Do we have a bit of a rising wedge forming on energy? Let's find out. Do we have overbought conditions? We can see some pretty nice higher highs in price, but lower highs in momentum, some higher highs in price, some hidden bearish divergence. So I could start to see a bit of a correction coming on energy. Okay, we've also been watching oil. I think that's one barometer we use pretty regularly. Oil sitting at 69.42. This is going to be an interesting week for oil. Does oil find a way to keep drifting and melting up higher towards 75? And then we have a bigger crash coming later. You know, crash might not be the right word. I would say more of a correction. But this high to this high, disagreement. I'm looking for oil to head down into the mid 50s or low 50s. If we drift higher towards 75, I could see it. That's where the next major resistance is. So if there's nothing really stopping oil, I could see us getting up there. But technically speaking, oil should be coming back down into the mid to low 50s for right now. There's a lot of jawboning going on in oil. You know, I understand that, you know, people are traveling this summer, so prices usually are pretty resilient with oil. XLRE, again, sector-wise, or that's real estate. XLE is energy. Okay, looking at some, you know, decently higher highs with some disagreement. Could we drift up? Take a look at this XLE past support becoming resistance. It's right there. So could we drift a little bit higher on energy? Sure. But we could also start to top out here, come back down just for a correction. That's it. Like, these aren't trend changes necessarily. These are just corrections. These are technicals. All right, so that's XLE. Let's go to XLB, basic materials. With inflation, okay, energy is going higher. Basic materials, consumer staples, everything just continues to drift higher. Things are getting more and more expensive. As a consumer, we probably see that and feel that every single day. So anyway, XLB, we have a really nice alignment. I mean, we have monthly target. This one was tapped. Look at this indecision. You know, I suppose that we could break this. Okay, I suppose we could break a little bit higher, but it seems like any type of movement to the upside should start to come back down with a divergent setup. So if I go back into my charts, okay, prices at essentially equal highs, strong disagreement with momentum, hidden bearish divergence with relative strength, and we also registered overbought conditions back in early May. So could I see XLB starting to work its way back down? Yes, and I'm looking for that. What else? How about XLI, industrials? Anything here? Okay, overbought conditions, divergence. I mean, really all of these sectors are looking ripe for a correction. Let's go XLY. Same thing. We're making higher lows. Okay, we are, I mean, I suppose if we do push a little bit higher, watching this, looking for disagreement. So XLY probably has, this is consumer discretionary. Probably not a sign of a top just quite yet, but I will set a chart alarm here on XLY. If we do tap these highs, I'm going to say look for divergence. So I'll set that here. Look for divergence. And then I want to see, do we end up tapping these lows? You know, lows broken. I'll just set a couple of chart alarms and get this stuff surrounded. Lows broken. Okay, any questions on that? That's XLY. XLP, this is consumer staples. This one, prices testing those highs, revisiting highs, stretching to new highs with disagreement with hidden bearish divergence. Okay, I mean, we're talking about COVID crash back down to $47 and change, all the way up to pre-COVID levels and beyond. So I think we're stretching into some pretty rare air for consumer staples. And I could just see a correction is needed. If we break the structure here, look for a little correction. Doesn't have to be much. Pull back to past resistance, become support. You know, maybe we go from $71 down to $68. But something where it looks like we might see some red this week in the markets. So we'll watch. You know, I'll be watching the heat map this week. We'll be talking about this all week in Flex. Okay, yep, good point. Raj says take a look at the 10-year note. That's the TNX. Last year with non-farm. Yep, last week Friday, non-farm. We were at 162 on the TNX. Now we're at 1.574. One thing I want to check, and probably in the next 10 to 40 minutes, I should be checking this, but I'm going to go to Mortgage News Daily, and we're sitting at the 30-year right now. The par rate's 3.13. 15-year is 2.53. we're still sitting at these, very low interest rates. So will we see these lows broken? I have chart alarms set at these Fibonacci levels to the downside. So if we can start working back down, that's excellent. If we start breaking these highs, this is what I'm going to say, okay? I'm going to go ahead and draw this on my chart. If we break these highs at 1.77 and it's pretty open to 2% or 2.5, I'm really just going to draw this in red. Okay, rectangle. And let me just illustrate this. Like, this is kind of a scary zone for price. Okay, so this would be end of bull market. This is what I think. I think that the necessity of raising interest rates, okay, this would be the end of the bull market right here. If we start to see the 10-year note drifting above 1.78, there's not much stopping it towards 2%. Take a look at this just ridiculous fall, right? We had highs here. This is back in December of last year. The TNX was at 1.9, 1.93. Now, if we break this level, and again, we might see it stretch to 1.9, fall back into this area, then make its way back up. But I think the inevitability is that we're coming back up into higher interest rates. And higher interest rates means a big difference for the world as we know it. Right now, we're seeing race to the bottom with currencies. Okay, 0% negative interest rates, very low interest rates, as much money as possible circulating in the markets to work with, to leverage, cheap loans, cheap money. Okay, that changes when interest rates go up. So this is where I think the reality kicks in. If we start to break these highs, I don't know how the stock market can keep on pace if we start to see higher interest rates. Okay, so that's what I'm looking for. But if we don't break those levels yet, if we don't break out of 1.77, if we come back into this, 1.5, 1.4, great. Then we will stay kind of in this current environment. It would favor being long stocks. It favors being long and being long risk. Being low, low volatility is probably expected. Risk assets probably continue to perform well. But I think what's scary is how quickly this can transition. So that's the hardest part right now, is just thinking about this is probably going to happen. It's just how and when, right? What are the catalysts that make it happen? Everyone right now is so nervous about inflation. It's front and center. It's on every mainstream outlet. So everyone thinks about it, which means it's probably not coming right away. But it's when people start to not pay attention. People think like, oh, we're over it. We're over it. It's like, well, we're measuring it from last spring to now. So it's a big difference between it because, COVID lows, it was at super lows. And now we have super highs. Well, again, you ask a consumer out there if you think that inflation is very real. And I think most would say yes. So this is what I'm watching. That's all I'm talking about. But 10-year note at 1.57, I'm actually kind of happy to see it drifting lower. I want to see if these chart alarms are activated or if this chart alarm at the high is activated. Okay, what else we have here? Any more consumer or any more sectors here? Let's go to real estate, XLRE. Another kind of sector that I think is probably peaking or very close to it. We have divergence, pretty easy to see. Okay, we have divergence between price making new highs, hidden bearish divergence on the relative strength. I think all the signs are there to be short XLRE. I do actually, when we go into class in about 35 minutes for equities on demand, I do want to talk about this. Maybe this is something, let me see if we got filled on XLRE for a power play version 3. I don't know if we did. I don't have an All right, I want to look at an XLRE, and maybe we go out until the 18th, or maybe we have something where I think we could look at a potential power play to look at shorting real estate with a bear call spread. And I just think that the alignments are looking pretty solid. There wasn't an expiration on XLRE, by the way, on 6/11, which is this Friday. So I think if we go out another week or two, 6/18, I believe, is the next setup. I'll just check this right here. So here's an option chain for XLRE. I'll bring it up on the chart right now. So I got to get logged back in. Fine. All right, do it. Let me just get logged back into my platform here. Okay, so I'm going to go in to take a look at XLRE. XLRE, and set this one up for a potential bear call spread. So I'll do a vertical call. 618 is our nearest expiration. Let me do some number crunching on this really quickly. So XLRE has a great setup. And I think I'm going to add this right now, actually. We have 4 minutes before the open, so 44.56. 44.56. I'm going to crunch this right now. 44.56 with a 1.42 ATR. Okay, so that puts us in a 45.27 or a 43.85. So if I was doing a version 2, let's see if we can do the 44, maybe the 40. So we're going a little bit of time. Let's go 45 by 46. I'm going to set this up for a bear call spread and go after a 30-cent credit. Right now it's trading at a debit, so we'd have to see price tick a little bit higher, which is fine. Now, current price is trading at, we closed at 44.56. So I'm looking to sell the $45 call, buy the $46 call, and try to collect 30 cents of credit on this one. Again, it's not going to fill at current price, but I'm going to set this one in right now. Okay. And let me get this into the proper account. Okay, so I'm going to take this trade right here. And I'm also going to place a slightly longer term one, XLRE. Do the same thing, but I'll go out a little bit deeper. So let's go 43.85. So let's do the 44 and go out a little bit further. So 618 to 716. And if I did the 44 by 45, I would sell this one, buy this one, and look for a 75-cent credit. All right. So a couple of trades on real estate. Now, again, it's, if I lose on this one, I'm going to lose $25. If I lose on the other one, I'll lose $70. So overall risk for one contract's not a lot. But this is one way I can just kind of take the trade and think that I've got a good technical setup. So I'm going to take this setup right here. We can discuss this today in class in Equities on Demand at 10 o'clock. But I'm interested to see if these fill. I think the pattern looks awesome. I think the calculations are pretty solid. And, we're going to have to see real estate cool off a little bit, technically. But I want to go ahead and buy myself a little bit of time. Okay. All right. So a couple of trades there in XLRE. Done. All right. So we'll come back to that. But again, why am I taking that trade? Well, based on price going here, and then, hopefully by now you've been in enough sessions with me, you see what I use a lot for my bottom indicators. This is a momentum oscillator. This is a relative strength. I see all the signs for a technical correction because we have price, momentum, and relative strength all disagreeing with overbought conditions. So from a technical standpoint, recovering to the pre-COVID levels, stretching into new highs. This is what I think, irrational exuberance feels like. I think that the real estate market is absolutely crazy right now, and not in a crisis bubble type of way, but just the need to cool off. Like interest rates will definitely help cool it off. I don't know if it's going to be a good thing for buyers out there or people that get stuck in homes they can't afford. I certainly don't want that to happen, and all of a sudden we revisit 2008 all over again in the next 3 to 5 years. But I do think that, people throwing cash and above asking offers, sight unseen, people that can afford to buy a house are getting beat out by people that are just tossing money at things. It's a little nuts, right? So anyway, that's what I'm looking at for the sector. Anything else? Utilities. Let's take a look at XLU. I want to get into some currency pairs and cryptos as well. XLU. This one I would just stand firm on right now. We have highs from pre-COVID highs at 71. This is XLU. This is utilities, a sector for utilities. Real estate we just did. All right, let's take a look at some cryptos. Bitcoin is at 36,510. Here's my summary on cryptocurrencies. Chart alarms are set all over the place. Recent highs, recent lows. I do want to buy cryptos lower. Quick sidebar. What am I looking to buy? Okay. Bitcoin I like. Okay. GBTC I like. That's not a coin. That's an ETF, but it trades a lot like Bitcoin. If you're going to buy Bitcoin around 20 to 25K, you can buy GBTC for about $25. So that's a long-term hold for me. Ethereum, US dollar, anything back to 1850 or lower, I'm leveling in. Okay, I'm gonna DCA. That's a dollar cost averaging. I like those long-term plays on Ethereum and Litecoin. I'm still holding Ripple as is. I'm still holding Stellar Lumen. I'm still holding EOS. I would consider getting back into Link US dollar, and I'll probably stay out of basic attention token. I am still in MANA USD, that's Mana, and I'm looking at Algo. Well, I'll probably stay in these. So if you can see the top here, these are ones that I'm liking. So Bitcoin, US dollar, GBTC, Ethereum, Litecoin. I'm in Ripple, and I'm still going to hold it. I'm in Stellar Lumen, I'm still going to hold it. I'm in EOS, I'm still going to hold it. All right. Link, I want to get back in. I took some cash, several weeks ago on Link. I took some cash on MANA. I'm looking to get back in both of those. Link would be probably anything below $20. Okay, MANA, anything sub $1, which is currently trading like 80 cents. So Mana is trading at 81 cents. If we come into 50 cents or lower, I like this for a couple of levels and then hold it back up to these highs at $1.50. Okay, let's go to Link. Link is trading at 28.26. If we can come back and revisit, let's say we have this big flush, some indecision here, start to work its way back down. Anything coming to $20, $16, I'm going to scoop up a pretty decent amount of Link and take this back up to the highs around $50. So let's say we get filled at $20. We go back up to $50. Well, there is, 150%. Okay. So not too bad. And again, Link could be something that longer term is a $100, $200 coin at some point in the future. All right. Gray is asking, do I have a list of my classes? Yeah, one way to check those out. So let's see. Best way to check them out would be the two that I'm the most active in is going to be. Let me go marketplace here. The Flex Trading Room, which is a FOREX, predominantly FOREX-based trading room. We're live Tuesday, Wednesday, Thursday, and I can look that up here. So Flex Trading Room. I'm in smarttrader.com. I'm in their marketplace section. I have my Flex Trading Room available here for a monthly cost. There are ways, if you're contacting Market Traders Institute, there are ways to get involved with an annual subscription for Flex Trading Room as well. So that's one way to see what I'm doing. Also, equities on demands. Which I don't think I have this in Marketplace, but I do have a direct link to this. So I have a direct link to this. So if interested. So, again, I mean, you can send me a comment if you'd like more information. Equities on Demand is a stocks and options trading room that myself and Tyson Clayton run Monday through Friday. And then my Flex room is me, predominantly Forex. We do talk stocks, options, stocks and options because of Equities on Demand. We highlight those, but it's predominantly a Forex-based course. And we trade Tuesday, Wednesday, Thursday, and I incorporate that into my Pulver report Mondays and Fridays. So those are the ways you can kind of follow me and see what I'm doing every single week. All right, let's go back to the charts here. Everybody good on the cryptos? So really what I'm doing in cryptocurrency is just setting a bunch of chart alarms and just staying patient. I'm not jumping right in. I did get filled on Litecoin at 120. I did get filled on Ethereum at 1850. And I'm just sitting tight. So I did the add on here at 1850. I'm looking at lower levels. We're currently trading at 2804. So I could see us finding, this monthly target, high to low, little consolidation, try to come back down. I'm looking for double bottoms. I'm looking for divergence. I'm looking for cost averaging in here and holding for the, let's say medium term, let's say long term. I would be willing to say, okay, I'm going to throw some money here in cryptos and my target's going to be the 2021 high. These highs are now targets, right? These highs are now profit targets. And again, it's speculation, but could we get there? Could we, start to accumulate more, build a base, and then see new highs? Sure. Could we break and explode to new highs, like crazy new highs? Sure. But that's probably not coming anytime soon. That's going to be something we probably have to wait for. So I think that cryptos have cooled down a little bit, and it's going to be interesting to see. I think a lot of the volatility, it still plagues the the widespread adoption of cryptocurrencies. I mean, right now it's still speculation, right? Right now it's not every single day we're doing stuff in cryptos, not yet. But I think that this volatility, it just doesn't check the boxes for something as a reserve currency, as something for holding, as something for, a funding mechanism. But does it get there eventually? Possibly. Okay. So anyway, I'm just waiting for chart alarms to activate, start getting in at better prices and hold. And my 2021 highs will be my next big target. So if I can buy Ethereum, 1850 or lower, and I can target 4,000 plus, there's another, 200%, or I guess 150% gains ish. Okay. Anything else on the currency side? Let's go New Zealand dollar, 72.33. We're still pushing a little bit higher today. I would look for New Zealand dollar to come back and retest the same highs here from around 7,300 and then start to make its way back down. If we break these lows, we should be falling back into 7,000 or so. I still like short on this one. Okay, Aussie dollar. We're at 7,762. This one may stretch into these previous highs before falling a little bit lower. I like this level back down to 7,650. I like this level back down to 7,550. I think that we have some really nice pockets. If you were with me in Friday's trading battle, we do have some pockets. We also, interestingly enough, have a daily pivot and a weekly pivot. So could we come right back to this monthly pivot, hit resistance, and fall back into that weekly at 77.20? Yes. And if that's the case, that's a nice little short-term trade for this week. Okay, so even though it looks like the dollar got beat up on Friday, I don't necessarily see that price, following through too much. I think we can revisit some of these highs, but look, it's the first week of summer trading. Expect some summer trading. Expect some lower volatility. Expect some ranges. So be watching those highs and lows pretty closely. Okay, let's take a look at dollar CAD. Dollar CAD's at 2084. Monthly pivot is 2150. We haven't broken those highs. One thing that I'll be watching really carefully for the next week or two is if we break 2150 on the dollar CAD, I think we're going to 24. If we get to 24, let's see if we have a 1, 2, 3 wave move that gets us back into 26. Okay, so this is, to me, in my opinion, I think this is either a fast move to 24, a pullback, and then a push into 26, or this might run, really aggressively, break this trend line and say at 25, then pull back, and then go up to 26 plus. So a lot of this is, number one, we have to break above 2150. I'm going to be really aggressive on my dollar CAD longs right here. If we break above 2150, I'm looking to get long aggressively towards 24. Right from there, I'm looking at my destination for 26. Could we end up getting back to 3,000? 1.30, 1.33, maybe. I don't know if that's happening now or happening way down the road. But my first order of business on the dollar CAD is let's break above 2150. I'm going to be aggressive towards 24. I'm hoping that we get back to 26 without any difficulty. And maybe that's a relief rally. Maybe that's a squeeze. Maybe that's oil starting to fall and finally cooperating. But technically speaking, that's what I'm looking for. So I do like that trade quite a bit. Another trade that I'm long in is Aussie Swiss. I'm starting to get long. I do have past resistance here around 67 and change. So I'm starting to level myself in for some small Aussie Swiss long positions. I am short on CAD Yen. We're at 90.37. My break even's around 89.80. We have lots of fantastic pivots to the downside. I certainly hope that those are hit. I would love to see CAD Yen dropping at least back to this level around 88. And if it falls to 88, decent profit. If it falls lower to the trend line, fantastic profit. But I'll be looking for CAD Yen to do that. Swiss Yen, I'd love to see this one fall as well. We're at 121.57. This is another one that if we can fall back into this trend line or break it, 116. And then looking for a big pattern to the downside. Okay, let's go dollar Swiss, and I'll start to wrap things up here. Dollar Swiss. Any other currency pairs you want me to take a look at? Thanks, Ed. That means a lot. Yeah, thanks. 2-0. Yeah, it was, but like I said, it was a fun session. That was a great session with Casey and Blake. I mean, look, both great traders. It's a hard environment, right? I mean, we're forced to take trades and do things we're usually not doing. So it's not easy, but it was a lot of fun. Boris did a great job hosting, had a blast, and I will do those, as much as they want me to. Those are a lot of fun. So, but it's, again, you kind of see like how our minds work and, kind of the crazy stuff we have to do when they're throwing off our normal routines with little challenges like you gotta trade. Oh, by the way, the other person's going to pick your trades for you. That's not exactly the easiest situation to be in. Dollar Swiss, let's see if we can get onto the right side of the trend line. Okay, right side of the trend line on dollar Swiss makes this look a lot better. I really like long dollar Swiss towards 93, 93.50. If we pull back into equal lows, this is not like I could see this happening. We may not break this trend line. We might be pushing down a little bit lower, and the dollar takes some more heat. Fine. Watch the lows, right? Watch the lows, watch the right side of the trend line, and then look for that break up towards 93, 93.50. It could just be a big range. We could go range high, range low on the dollar Swiss. So I'll be watching that. Okay, pound yen I see. Pound yen is at 154.81. I'm looking for pound yen to break these lows. I'll set a chart alarm above the high. If we can break this recent low, maybe a correction pattern back towards 151. Okay, so I'm going to set a chart alarm at the high. And just make a note of that. So highs. I have a chart alarm here at 153.35 or 153.40. Some more time over here on the right-hand side of this aggressive trend line would hopefully mean a topping pattern, a little bit coming back to 151, maybe lower towards 149. At this stage, if I think my break even on the pound yen is around one. Actually, no, I haven't gotten in yet. We have to talk about this again in Flex. So we do have a pending order at 153.40. If we break this level, if we break 153.40, I'm looking for this thing to short. So I do like that setup. I think if we break below 153.40, we're looking for a rundown into, I'd say safely 152. I'd love to see it get to 150. So that's just a nice round number, 150. Okay. All right. I see Aussie CAD. I did dollar CAD already. Aussie CAD is pushing up nicely. And I'm going to check and see where I'm at on this one. I should have some profits wrapping up here on Aussie CAD. I've got my Perfect Storm robot looking for 100 pips of total profit. And we have a monthly target available. If we push up a little bit higher, come back into this pocket from mid-May, I think that's a very realistic level that we can get back to, and that Aussie CAD should close for profit. This is another one that I'm looking for, something like this. If we have equal lows, in fact, last week, take a look at this. Look at how close we were to this yearly pivot. That yearly pivot sitting around 92.50. Look at the change right off that pivot. It's acting as a really strong support level. So we're right back into these equal lows, bouncing aggressively. To me, it looks like we have the Aussie CAD making its way back up into 96, possibly 97. And from there, are we going to go all the way back up to the range highs, or are we coming back down to range lows? I don't know yet, but I like long on Aussie CAD. I like long on New Zealand CAD for this week. Directionally, that's what I'm looking for. Okay, so right now I'm long on Aussie CAD. It's looking pretty good. I'll hopefully have some profits rolling in this week. Same thing on New Zealand CAD. Okay, if we come back up, I'm just going to set some chart alarms. Chart alarm at the low, lows, and chart alarm at the highs. And just get it surrounded. There we go. Okay, what other requests? Let me go back into this here. So what else? Euro dollar. Sure. I saw pound yen. Euro yen, Charles. Sure. Euro yen is falling. I'm not going to do anything on euro yen, Charles, until we actually spend some time on the right hand side of the trend line. So this could still, come to the trend line, find some support, make its way back up, find the support, come back up. It could still do this a little bit longer. But if we start to have an aggressive move south and we start to spend some time on the right side of the trend line, I'm looking for at least a corrective move into past resistance, support, past resistance, support. Levels like this on the euro yen look pretty good. But for me to take the trade, I need to see price on the right-hand side of the trend line. Right, and then euro dollar, and then I'm going to wrap up here. I've got class coming up in 15 minutes. We're at 21.75. I do like euro dollar short at the high pre-non-farm, and I like the highs over here at 23 and change. So if we come back to retest, I like dollar short or euro dollar short. If we come back up and retest the highs from, that'd be what, January this year? Yep, January of this year. If we come back and retest those levels, I like both of those for euro dollar short. So at current rate, probably not doing anything. We come back and set a chart alarm here, which I will right now, looking to short. So something like 22.50. So 22.50, look to sell. If we go back into those January highs, which is 23.37, I'll just go 23.35. I'll go look to sell. Look to sell. We have January highs. There we go. So a couple chart alarms set on euro dollar. I'll also set one below the lows in case it starts to run away from me. So 2100 at lows. So maybe I miss the trade if it breaks lower. But if it's surrounded and I can have this thing test the highs at 22.50 or 23.35, I'll be looking to sell that euro dollar. Yep. I saw that, Daniel. I don't know what that means. What I did see was interesting, though, is did you notice how they said that they're you know, for one winner, if they only have one winner, which I don't even know how this works, one winner gets $300,000. Or they could have like 6,000 winners that get $100 each. So what I think it means is they're just looking for more volume to be traded. That's what I think it means. I'm not touching that contest. I'm not going to put $100 in Dogecoin. I'm not trading that thing. So I don't know what it means, but I doubt there's going to be one winner. I think it's going to be thousands of winners that they might, you know, fractionally give away $100 or whatever. But hey, trade your own risk, you know. All right. That's going to do it for today. Thanks for being with me today on the Pulver Report. We're live. Nice to be back with everybody this week. Business as usual. See you in Flex on Tuesday, Wednesday, Thursday. See you in Equities on Demand in the next 13 minutes all week. We got some good trades lined up for this week. I'll talk about XLRE since I took the trade on that today. I'll talk it over with Tyson here in the next few minutes, and then be back on Friday. Let me just double check that is in fact what my calendar is. So let me go into my calendar really quickly. Just double check everything for Friday. So we're good. Okay, yep. So we'll be back at on Friday morning, 9 a.m. Pulver Report live to wrap up for the week. See you this week in Flex. See you this week in Equities on Demand. Okay, talk to you soon, everybody. Have a great week. All right, bye.